Hi, this is PR Sundar. Today I am going to discuss about open interest. Very first thing, you go to YouTube or Google, type open interest or PCR. There are lots and lots of videos, but listen to me in this episode and I will be explaining from a different perspective and you will know by the end of this video. Let us look at the definition of open interest from Investopedia. Open interest is a total number of outstanding derivative contracts such as options or futures that have not been settled for an asset. The total open interest does not count and total every buy and sell contract. Instead, open interest provides a more accurate picture of the options trading activity and whether the money flows into the futures and options market are increasing or decreasing. Okay, the definition looks very complicated. Now, let me explain in simple terms. One person buy an option, another person sell an option. Then we say open interest is one lot. One person buy 5 lots, another person sell 5 lots, then the open interest is 5. Many times, there are many inquiries coming to me, sir, NSE India has 2 different websites. One is a new site, the other one is an old site. In the old website and new websites, the open interest data is different. But let me tell you, there is no difference. In the old website, they are showing number of shares. In the new website, they are showing number of contracts. Nifty contract size is 75. You buy one lot of option and I sell one lot of option. The contract is 1. So in the new website, it is showing open interest as 1. In the old website, they are showing this as a 75 because you buy 75 shares and I sell 75 shares of options. So that is the basic difference. For my entire study, I am going to use only the old website. So we talk in terms of number of shares. What is the significance of this open interest? Generally, what technical analysts say when it comes to options, among the put options where there is a highest open interest, then they consider that as support. Among the call options where there is a highest open interest, they consider that as a resistance. There are so many ways of finding support and resistance, but in options, support and resistance, this is a very popular method used by the technical analysts. And this is the website. I'm going to live market, go to option chain, equity derivatives, and this is a weekly contract. I'll take the monthly contract. And if you see 4,600 put option and call option also being traded and there is open interest of 1,575 shares. That means 21 lots. And today also 2 contracts were traded. But everyone knows that the Nifty is not going to fall below 4,600 by the end of this month. Even during the peak of Corona, we fell only to 7,500. If you look at the open interest, that's why the open interest is very low at the far away options. If you look at the open interest, 11,000 put option has about 18 lakh shares open interest and you come down and you can see 30,000 put option is the one having the highest open interest among the put options, 38 lakh. All the remaining is 20 lakh, 21 lakh, like that. So, for the month of December, we can reasonably assume that 13,000 is the support. Now, one basic question, 38 lakh is the open interest at 13,000. That means 38 lakh shares have been bought and 38 lakh shares has been sold. So, that means this is the place where maximum number of buyers are also there and this is the place where the maximum number of sellers are also there. Maximum number of buyers are there means what? Maximum number of people feel that market will be falling below 13,000 because the people who buy the 13,000 put option, they will make profit only if the market fall below 13,000. Maximum number of sellers are also there. That means what? Maximum number of sellers are thinking that market will not fall below 13,000. So maximum number of people think that it will fall below 13,000, maximum number of people think it will not fall below 13,000. Then why the technical analysts consider this as a support? So the technical analysts taking the view of the seller, they are not taking the view of the buyer. Why? The reason is very simple. Options is a game where there is no level playing field. A buyer, even if somebody has 2,000, 3,000 rupees, he can become a buyer. But a seller cannot sell with 2,000 or 3,000 rupees. For selling one lot of call option, the margin money approximately is 1.2 lakhs. So that is number one. So buyer is a person with a small money, seller is a person with a big money. The buyer has only the limited risk. He buy the option for 2,000 rupees. In the worst case scenario, he is going to lose only 2,000 rupees. But whereas seller loss is unlimited loss. So because the stake is very, very, very high for seller, because he has to deploy a large margin money plus he has to bear the unlimited risk. So stock market analysts assume that the seller view will always be correct. The buyer view may not be correct. So that is why the technical analysts consider from the perspective of seller that the sellers are selling maximum number of shares at 13,000. So therefore 13,000 should be the support. These are all only guidelines. And tomorrow or in the next few days, if market falling 200, 300, 400 point and the people who sold at 13,000 put option may square up the position, may book the loss and they may shifting the position to 12,500 put option. So after 1 week, if you see if the market has fallen 200, 300 point, instead of 13,000, the 12,500 put option will be having the highest open interest. So what I mean to say, number one, you look at the highest open interest on one day, the same strike price will not be having the highest open interest until the end of the month. Things can keep changing in between. So that also you have to keep in mind. And another most important thing, the support and resistance is decided based on what option sellers are doing, not based on what option buyers are doing. And that is because the option seller's stake is very, very high and he carries an unlimited risk. Option buyer carries only a limited risk. So in this episode, what we have learned, what is open interest and where is the maximum open interest. So where maximum open interest among the put option is generally considered as support, where the maximum open interest among the call option is considered as a resistance. Thank you for watching.